The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is the Futures Hour, but I'm going to start it out with a stock that's in the news, and it's Facebook. What I did was post into Tiger TV the stock that started well over 15 months ago, back in May at $45 a share, before it went down to $19 a share. On a technical basis, we didn't get a buy signal in Facebook until it hit $20 a share. It made a Gartley at that point. We made another Gartley on the 7-month time frame at the $23 per share level. But what I wanted to share with you today is the fact that, as most of you know, the stock opened up, I think, 28 or 29%, which was right at the 61% retracement at $34.54 a share. And it only left a gap of about $9. Now, folks, a gap of $9 in a stock that trades this much is just ridiculous. What's really amazes me is that I know the earnings were great. I mean, I don't understand the earnings, but, I don't know how they massage the numbers. If they massage them, that I don't know. All I know, if this was not a setup, I've never seen one. I mean, this is ridiculous. This is why I'm a technician. I used to fall for this stuff. I used to hear these reports that were coming out, and and after a while, I realized that it was, the wrong time to be doing things. And maybe this thing goes to $60 a share, which it certainly could. I don't know. I'm not a social networking person. I don't have Facebook or Twitter or LinkedIn or any of them. I've never done a text message, any of that stuff. I barely have a cell phone that works. So. And it does work, but anyway, this is a total classic. It was a sale on the opening, as far as I'm concerned, and the very first objective would be at least $27 a share. That would be back down into the gap. I don't know if that's going to happen or not, but we'll wait and see. However, this is the commodity show, so we want to get to the commodities, and we do have some things happening in the commodity. I've got to take a second here and go to the commodity page and get everything ready for you. But I had to share that the thing with Facebook because it's such a beautiful pattern at a perfect 61% retracement, and it's just really something that I think is very, very important. Now I wanted to to start the show today with the gold market. Because we've had some pretty good action in the gold, and now all I have to do is try to find it. I've got too many things to cover today, and so I probably will have to draw up a new chart in gold, which will only take a second, and we will take a look at it because gold had a nice retracement overnight. We didn't quite get down to the $1,300 level that we were hoping to reach. But what we've done right now is we've made a nice correction, and we're making a 61% retracement where I think the market is going to have some serious problems, but we're going to approach that as we go through it. Give me 1 second here so I can get this done correctly, and then we can move on to the next one. Wow. Nothing like having technical problems on a Thursday. Give me 1 second. I'm still having a slight problem here in the gold. It's an hourly chart, and I wanted you folks to see what is happening because it is one of these patterns that we like quite a bit, and that is the reverse point wave pattern. And we will see if we can get this thing working right now. And I think we've got it up now. You can see gold. We made a correction from the 1348 level. We dropped $40 down to the 1308 level last night, and now we're rallying back up into this 1333 level, which I think will give us some resistance, and then we'll be able to see. That would give us a really good spot to be a buyer in gold sometime next week. And I'm looking for about a 3 to 5 day correction to come down to about the 1292 level. I've drawn in the big ABCD on that. If this happens to draw out, the way we think it is, that would be a $56 correction from the high, and that would be a pretty normal correction. And that 1292 level is also a 382 coming off of the low from 1170. So the key level to watch here for buying gold is 1292. The key level for selling gold is at 1333 an ounce, and if that's correct, it shouldn't get above 1342. So that's what we're watching in the gold market at this time. By the way, if you have any questions, it's 877-927-6648, and I'll see if I can answer some of these questions for you. I wanted to take a few minutes here to cover silver, even though it's been, lagging gold quite a bit. It's still been hitting some really nice numbers on this last sell-off that we had in the silver market. I mean, it was just absolutely spot on to a 61% retracement. When you're looking into Tiger TV, you'll see that the red line is the 60-minute gold chart, but the chart itself is the 60-minute silver chart. That way I can watch them both to see if there's a divergence between the two, because when you see that happening, it's very important. Now, what I'm looking for in something like this is I'm looking for silver to pick up, and the reason why, that's the poor man's gold. And if we can get the small speculators to come into the gold and silver again, it's going to be very important. The problem is this. Because of the fact that all these things that are going on with the warehousing, everything on the internet now that you see about gold and silver, is that they're questioning the warehousing practices of the major banks. How much gold is there? Where is it? How is it held? The same thing with silver. And this really damages speculation. And the reason why is the exchanges raise the margin requirements on gold and silver to $10,000 on gold and $12,000 on silver. So that immediately drives out a lot of small speculators. It keeps the open interest down. And so the only people in there are going to be the commercial or the big speculators. Nothing wrong with that. You have to learn to play with the big boys just like you do with the kids in the playground. So that's not a problem. But you would like to see more players come in, and you get that when you drop the margin requirements, and they're doing the exact opposite. And my assumption is they're trying to protect themselves against something. I hope it's not anything like what we had with MF Global and John Corzine, or PFG Best and Russell Wassendorf, where people were actually defrauding people. But frankly, the way the state of these things are right now, I never thought the Merc would ever, allow somebody like, Russell Wassendorf and John Corzine, to pull that type of wool over people's eyes and then not come to the plate and, really be on the side of the customers, because I always felt that the Merc was there to help us. I know I've talked about the chain of command in commodities before, but I'll do it again because it's very important. It's the exchange first. In other words, the people that own the stock in the CME. The second are the exchange members, or clearing members. These are the people that do the clearing of all the trades that go through. The third are the members themselves that own the seats. And right after that are the customers, and that would be us. And so that's the usual chain of events. Well, with MF Global and PFG Best, the customers, they didn't care. And that's the first time in the 50-some years that I've been in this business that that's happened. But again, when you're talking about $1.2 billion with MF Global, that was a big hit. No matter any way you look at it, it was certainly something that was, very, very damaging, to our business. And we all know what happened, or still don't know what the ramification of this stuff is going to be. But we will find out, a little bit later on to see if these are going to be fixed in the near term. Frankly, I'm not sure that they will, but we'll have to, look at one thing at a time. Now, we have a situation coming up in December corn. We're breaking down quite a bit. As you recall, I want to get the daily chart up here because we did break down a great deal, and we're heading down to the long-term 1.618 level. We missed that by just a hair's breadth here recently, and we're going to take a look at it in just a second. As soon as I can put it into Tiger TV, you'll be able to see that we're having a nice butterfly forming down here at the $4.75 a bushel level in corn, and so we're going to be nibbling at the corn side again, and we're buying it. In fact, we bought some today, and we're looking to see a rally of a minimum of 25 or 30 cents. And this is the end of July, so the corn is growing strong now. That's why the prices are dropping. It looks like it's going to be a bumper crop. The nearby corn, which is the one they're trading now, which is September. July is off the board. So September corn is trading at $1 a bushel above, more than $1 a bushel above, where the December is, because there's no corn to deliver. And so the people that want to buy corn right now have to pay up for it. What they're trying to do is to stay away from buying corn until the crop comes in, which should be a bumper crop. But remember, a lot of things can happen during August and September and early October. There could be extra rain. There could be a frost. There could be, a very, very bad drought that could last 2 weeks. I mean, anything could make this thing take off. But the chart says, you got to take a shot at the corn here again. We tried it several times. 3 times it worked. One time it didn't. So we're going to be nibbling at it again here today and see if this is going to be correct. We will report this on our regular show on Monday, and we will be able to take a look at that, very, very closely. By the way, I will make an announcement here. We've got a new grandchild coming very soon, and so I'll be taking a couple weeks off during the month of August to be with the family and enjoy the 2 little babies. We've got a 2-year-old who's smarter than me already, which is not saying a whole lot. And then we've got the new one coming, and he's a little boy also, so it's important. And also I want to congratulate the royal family on naming the little boy George after his great-great-grandfather, George VI. And if you've ever seen the movie The King's Speech, it's a really good movie, and I think you'll enjoy it. Won a bunch of Academy Awards, so we'll see what happens with that. I wanted to go to the soybean market now because it is under pressure now also. We've had some bearish Gartleys along the way in this market for quite some time, and now we're coming down into some major support in soybeans. We're right around 12, 13 a bushel. Got to take a break here, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we've got a caller from one of the most beautiful places in the United States, Asheville, North Carolina. Howard, are you there?
Yep, I'm here, Larry. It's
what
a beautiful day.
Oh, it always is down there in paradise.
Blue Ridge Mountain.
What can I help you with? What can I help you with, my friend?
Hey, several months ago you were talking about Barry Lind, who passed away, and you talked about when you were trading with him, and you and I go back to the same time period, the 3-day rule that you used. I wonder if you could just give us a better, more comprehensive explanation of that approach. In other words, did you use a stop within the 3-day period? When you were at a loss at 3 days, did you automatically always get out? And have you continued to use that rule?
Yes, the answer to all those questions is yes, but let me explain it to you. When I first went to Chicago, which was in I believe it was January of 1982. Yeah, it was January of 1982. We started trading the S&P on on April the 16th of 1982. And when I first got there, I did my clearing through Lind Waldock.
Yeah.
Jack Waldock was a hog farmer, as you know. He brought Barry Lind into the business. I did a lot of my commission business when I was not a lot of it, all of it with the exception of metals, through Lind Waldock, and so I was treated very nicely. He asked me to come to his office, and he said, "What can I do to make your stay here in Chicago fun and profitable?" And I said, "Well, the one thing that would really help me is that if I have a loss in something after 3 days, just take me out of the trade. And he said, do you want to put the order in? He said, do you just want to have the runner, take the order into the pit? And I said, well, just have the order, just have it filled, and then give me the fill. I don't even want to make the decision. And the reason why I did that, Howard, was because I had studied all of the trades that I had done for my whole life. I still do that. But if you hold things past 3 days, and the things that I deal with, pattern recognition, they either work right away or they're probably wrong. And 3 days is about as wide a margin as you have. So I would have a stop in, but if I hadn't gotten stopped out and I still had a losing position, they took me out. I was on the Merc for 3 years. I was on the floor, and I think it was about 6 times they took me out. And believe me, it was the right thing to do because the market, continued going, far higher, so that's or lower, whatever it happened to be.
Good
but
explanation.
Yes.
I think I should have followed that rule. I have and I haven't, not necessarily the 3 day, but I've learned that if you hemorrhage, it's a disaster. So.
Yeah, it really is. And, if you've ever read Reminiscences of a Stock Operator by, Edwin Lefevre, which is about Jesse Livermore, he always talks about you never want to answer a margin call because 2 things are wrong. A, your analysis of the market is wrong, and you're just increasing the hemorrhaging instead of stopping it. And so, you just don't want to do that, and that's where the real problem lies. But we lost a real component of our commodity markets when Barry was killed in Palm Springs in January. It was very, very sad. He was hit by a drunk driver. As a matter of fact, I had a very dear friend, one of my students from 20 years ago, was visiting me, and he lives in Palm Springs, and we were talking about that because he had lost his son to a same type of drunk driver 5 years ago. And so they had a lot in common. But, you have to empathize with the folks, but I wish they would someday. I'm going to get off my soapbox. The cars would not start. Have a breathometer right in the car, and the darn thing won't start if it's got an alcohol level that's wrong. And I think that's the best thing to do.
Absolutely.
Yeah.
I have one other question. You made a comment today. Usually I listen to the archive shows. Today is sort of unusual. I'm here. But you made a comment about gold parameters, and I'm not sure. It sounded to me somewhat confusing, like you were selling at 1290 or 1292, selling again at 1333. I don't believe you wanted to say that.
Yeah, I probably said it wrong because I'm really tired. I was up all night.
Too late.
Yeah, no, these markets are they're fantastic. I mean, some of these currency markets and other markets have just been unbelievable. So it's taken the toll on me. But after the show today, that's it for me. But no, I was looking to be a seller of gold up around the 1333 level per ounce, and then if it gets down to 1292, stay with us, Barry. Okay.
Okay.
No.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back with Howard from North Carolina. Howard, are you still there?
Yeah, Larry, I guess what I'm really asking is, you have that 1309 bar down there. You have your 1347 bar up at the top. How did you derive the 1320? I guess I'm really confused there.
I think about the best thing I could do would be to just start all over with the gold and just walk you through it, because I think if you're confused, other people will be confused, and believe me, it's not easy anymore. Because
thanks for the compliment.
Well, no, it's true, because we have so many things going on in these markets nowadays. There's going to be some numbers here, but I'm going to just draw in the fib numbers so that you'll be able to see them when we put them into Tiger TV. And then I'm going to...
I'm not a big fan of Tiger TV because of the clarity. But I have my own live gold chart, so go ahead. I can follow you there better. Okay.
Well, basically what I'm looking at is I'm looking for the market to make an ABCD from the 1348 level. Down, then it made
1348 was I've got a 15-minute bar on July 23rd.
Yeah, that was 2 days ago, and then last night we had a low at 1308. Then we rallied up to the 61% retracement near that 1333, and I think that is probably going to hold it, and then it'll come down. My assumption is it's going to come down to that 1292 level, where I'd like to look to be a buyer of gold, because long term I think we've made some type of a major bottom in the gold from that 1170 area, and
So
I'd like to get long it again.
1292 would be that massive expansion bar that we had on July 21st.
That's exactly right. You'd be going right back into that area where we came out of Sunday night. It just exploded out of there, $20 with virtually no volume, but, the volume came in afterwards. So,
well, what credibility do you put? This is another question I've always had about your patterns. What credibility? So you give credibility to low volume, off-hour bars regardless.
I don't really watch the volume very much, but on Sunday night I happened to be watching gold because I wanted to buy it, and it moved so fast I never had a chance. And as it was going up, I happened to use commodity quote graphics so I can see the bid and offers and the trades that happened, and there was no volume. It was probably 100 contracts that took it up to $20, and then it just hung there for a while.
So you still feel that's credible?
Yeah. I mean, something did it. I don't know what, but I just look at it to try to be. Every advantage I can get, I try to take.
Okay, so on that 1309 bar, basically I saw that coming right back down into that first retracement off that expansion bar.
That's correct. That's exactly what it did, yes.
Okay, so how did you derive 1320? I'm still lost.
1320, I must have misspoke on 1320 because 1320 doesn't really come into it. It's the numbers 1333 is what I was looking at.
I'm sorry, 1333. So we came off to there.
Yeah, we rallied back to a 61% retracement at 1333, and that's what I was watching.
Okay, so if we broke out from there, would you be a buyer?
No, I don't buy breakouts, Barry. I just send my checks directly into the Merc because I never win on those.
Okay, so where would you be a buyer? Down below?
I want to buy it on weakness at 1290.
Okay, all right.
You got to buy them when they're crying and sell them when they're yelling.
Okay, now I understand what you're doing. Okay.
Okay. Thanks a lot for calling in.
Okay, thanks, Larry.
Okay, Howard. Bye-bye.
Bye-bye.
Okay, folks, we've got a special treat. We've got our friend from Singapore. William, are you there?
Yes, I'm here.
Thank you for waiting, my friend. I know you were being very, very patient. Anyway, what can I do for you?
Well, firstly, let me congratulate on the arrival of your second grandchild. I think it's something worth to celebrate. Yeah,
so
why you are taking a break.
We're very happy about that. He's going to probably be born on my daughter's birthday, so that'll be fun. And we certainly enjoy the grandkids. As you know, when you get older, those are a few things you get to enjoy in life. Sure. So what can I do for you, my friend?
Okay, I have two questions. First is on the Apple. As you know, I'm always following the Apple.
Yes.
And you did very well yesterday as mentioning about the 444 resistance. There are three reasons why, you should go on short, and really it came down. I was actually monitoring yesterday, and it was, not even trying to come, it's always trying to move back up to 444. But today it really came down. So what would be the next step if we were to, go from here?
Okay, now we left a huge gap, from where the earnings, that gap was around the 424 level. So I would think a minimum that we'd be looking at would be the top end of that gap at around $427 a share. That's what I would be looking at. Now, if the market gets above 445, that would tell us that this pattern has failed and we're going to go even higher. But the first objective on the downside, would be right around the 427. It made $7 on the first few hours this morning, which would have covered your initial risk, which is nice. But now, you'd basically be in a free trade on the short side, because if it gets back to 44 again, something is wrong.
Right.
If it gets back to 444, I would think something would be wrong, because it came off sharply. It's trying to fill the gap now, and I think we should be able to do that. But we'll have to wait and see over time whether that happens. The main thing is, ever since February, we've had lower highs in Apple. It doesn't make any difference what the sales or earnings are. The first high was at 483. The second one was at 468. The next one was 465, and then 455. And this one is 444. So we've had 4 lower highs in the last 6 months. This is not a bullish. This is not a bullish pattern,
Yes, that's right. Okay. My second question, or rather it's not a second question. I must say that, I must thank you for, telling me that, because I think 2 days ago, when gold retraced from 1348, I believe the high, to 1340, I was tempted to actually, go on long, because I took the retracement from 22nd July to the high, and 1340 happened to be a 23.6% retracement. However, you told me very firmly that it will definitely retrace more, and that's where we see that it's come down to 1312 today.
Well, that's a lucky guess, William. The only reason I said that, William and I Skype each other occasionally because he's a good friend from Singapore, and we Skype quite a bit, and we've been involved in the gold market for quite a bit. And when we got up to the 1348, as you know, it was a 1.618 expansion of the the daily chart of the short-term time frame, of course. And so I was expecting at least a $50 correction here, and that's why I was assuming. And I still think we're going to get down to the 1292 level, William. So that's what I'm really waiting for.
Sure, I'm waiting for that. I may actually go on short right here, because I see that it happens to have on the 5-minute chart there is a nice butterfly pattern, and yes, I think we trace I think about 61.8% from one of the high. So I believe that it what you say, that it will probably come down further to 1290. I'll wait patiently for that.
Okay, we'll keep an eye on. Thanks for calling in, and
be with your grandchildren.
Okay, be sure to save some durian for my wife. Okay, she's waiting for it.
I will. I will.
Okay. All right. Okay. Thanks a lot.
Bye.
Okay. All right. Okay. The next thing we want to take a look at, folks, is crude oil. We had a very interesting situation today. We're in the midst of a 5-day sell-off in crude oil, and it made a perfect AB equals CD move down to the 104 level. We took out 104.20, which was the low that we made way back in June, and we took that out by 3 cents. That's $30 in a $104,000 contract, and there were no stops there at all. And at that point, you had a big ABCD pattern completing. You had a butterfly pattern completing, but the main ABCDs is what really occurred. And of course, the markets rallied well over $1,500, in just a matter of a few hours here. So it looks like there could be a substantial bottom here in crude oil for the time being. Now, we've covered the corn, we've covered the soybeans. Wheat is still heading down. We've got lower prices, I believe, coming in the wheat. We've been watching it for a great deal of time now. If you'll give me 1 second, I want to bring that chart up, because wheat is one of the things that we like to trade, but we haven't had a really tradable bottom in it, and we're getting very, very close. It's a very harmonic patterns to trade in wheat. By that I mean it hits the ABCD and the 61% retracement levels, quite a bit. And we're looking for wheat to come about another 26 cents lower. That would be down at the 786 of the low from last December. It'll also be the 61% retracement of the low from 2011. So this is really on our watch list on the commodity front, looking at the wheat. And then we're looking at December wheat. And next week, as a matter of fact, we're going to have Rich Anderson from Anderson Capital Management back. I like to have him on at least once a month, because he really he knows the grain markets better than anybody that I know. He also happened to be a very good friend of Barry Lind. And of course, Barry had a lot of friends because he was just a real gentleman. He had no enemies that I knew of, but he was a real gentleman. Anyway, we'll be watching this wheat down here about another 22 cents lower, which is going to be happening. Now, there's a rumor going on at TFNN that I've got a birthday on Sunday, and believe me, folks, that is flat out not the case. I gave my birthdays away 10 years ago to anybody that's 20 years old so they could start drinking a year early. So I don't have birthdays anymore. So no need to send me any cards or letters or anything like that. Birthdays don't exist in our household except for the little ones. Okay, on to the next one. We've talked about wheat. We've talked about beans. We've talked about corn. We've talked about crude oil. And I really think we really need to talk about the Treasury bonds and the Treasury notes, because these are commodities. They're the really big ones here. And I think this is the real problem that the market's going to have. And that is when these things, we made a low here 2 weeks ago, but the rally that we've had has been very, very suspect. We've only been able to rally 3 points in the Treasury bonds. The last time we had a major low, we rallied 8 points. So this is telling us that it's a very, very weak rally. I bring that to your attention because if you'll remember looking at the long-term weekly chart in gold, and I want to bring that up now just to remind everybody that what happened during that time, so that if the same thing happens in the Treasury bond market, we will be able, to take advantage of it. Because after we made the big retracement in gold up at the $1,782 per ounce level, which was the Gartley pattern at the 618, we had 5 very, very shallow rallies, no more than $140. And this last rally we had gold was $140, and then the market, broke down badly. So if this happens in Treasury bonds, and we go below the 132 level in the September bonds, which is the 618, that's telling us that the same pattern that is happened in the gold market when it was up around 1,700 is happening in the bond market, and that means that interest rates are going to go a lot higher. We're already in higher interest rates, folks. You can, just look at the long-term chart in the Treasury notes that I put into Tiger TV, the weekly chart on T-notes, and you can see the head and shoulders pattern and the fact that we've been in a massive down move, ever since that pattern completed. And the head and shoulders pattern was one of the ones that Dr. Andrew Lowe from MIT featured in his book, The Non-Random Walk Down Wall Street, because it's one of the more, popular patterns. It was, made popular by Gartley, of course, in his book, Profits in the Stock Market for 1937. And then during the 30s, around that same time, Schaubacher, who was the father-in-law of Edwards and McGee, also was a big proponent of the head and shoulders pattern. And all we do is we just add the ratios of expanding ratios of 1.27, 1.618, and then we look at the contracting of the shoulder, of the right shoulder, to either be 618 or 786. When all that comes together, that gives us what we call a perfectly symmetrical, head and shoulders pattern, and that's what we're really looking for, to have happen. So we'll see if this is going to be the case. We'll have to let history decide if that is going to be happening, as we go through. Now we have an interesting pattern happening now, and I'm going to bring it up because it's a commodity and it's also a stock, and that's the S&P. It's the S&P 500. As we've been watching this, we're just looking at it on a 5-minute basis. I'm going to bring it up here and let you folks see it. But we had the reversal pattern here in the market way back. Oh, we got to take a break here, and then we'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, I posted into Tiger TV the 5-minute chart of the E-mini S&P that we've been watching here over the last few days. We're completing an ABCD Gartley up here at the 1686 level sometime today, I would assume. That would what I would think would be a relatively low-risk selling opportunity if you're on the bearish front. But what I'd like to do now is I'm going to get on my soapbox. Somebody sent me something that is incredibly interesting. It's from the Library of Congress, and it's from one of my favorite presidents, Thomas Jefferson. And these were his 10 rules that he lived by, and I want to repeat these to you folks to see what you think. The first is, never put off until tomorrow what you can do today. Never trouble another for what you can do for yourself. Never spend your money before you've earned it. Boy, if that's not true of trading, I don't know what is. Never buy what you don't want because it is cheap. Also true about trading. Pride costs far more than hunger, thirst, and cold. We seldom repent for having eaten too little. I should mark that one down somewhere. Nothing is troublesome that we do willingly. And how much pain evils have cost us that never happens. In other words, don't worry about things. You know, folks, they usually don't happen. take things always by the smooth handle. In other words, try to do things that are relatively easy to do first. And this one is my favorite. When angry, count to 10 before you speak. When you're very angry, count to 100. And boy, if that's not true, that's the same. That's same in everything. And also that goes with trading too, because one of the reasons people lose is they do revenge trading. In other words, they get stopped out of the S&P, and I'm sure that's the devil's workshop anyway. But what they'll do is they'll just keep selling it, trying to get even. Doing revenge trading, and if they do that, it's just a matter of time before. It's goodbye house, goodbye car, goodbye boat, goodbye wife. So, that's what you're watching. We're coming into an unemployment report tomorrow, I believe. So there'll be some, wild gyrations in the market. We still have not taken out the highs in the New York Stock Exchange Index. We came within 3 cents. So that's potential for a double top. The VIX has bounced back a little bit from death's door, but it still hasn't turned much. So whether this top is in or not, we'll have to wait and see. The long-term charts have not changed at all. They're still extremely bearish, in my opinion. But the market has not got the memo on that. When they'll get it, I'm not sure, but we'll just have to wait and see. We've talked about copper several times. I don't even want to waste the time about putting the copper into the move here, because it's it's so bearish compared to the rest of the market that it's really insignificant to really look at it. I think that looking at the VIX chart, though, would give us a little bit better idea of the fear that's in the market has totally dissipated. Nobody is afraid of the market any longer. Everybody thinks it's going to go up forever, and they might be right. But this VIX is incredibly oversold, and usually when it gets down in this level, like we were in March and also in May, we get a big surprise somewhere that makes the market move the other way. Whether that's going to happen this year or not, I don't know. I've just got such a bearish bias. The other markets have been so good to me. I haven't got hurt in the S&P or anything. I've made some money actually, but I haven't made any really significant money because I've been looking at this since May. I had a really good move down, into June 23rd on the full moon, and now we get to end the show. Live every day in an attitude of gratitude, and may God bless.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.